The following is a presentation of TFNN. Live at TFNN, the Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, the Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the January 15th wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I'm grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with empowering beliefs, my favorite, which is become your own electrician, the electrician of your beliefs. The reason is because beliefs, they've got the power to create and, of course, the power to destroy. You and we've got that awesome ability to take any experience of our lives and create a meaning that, well, for some, disempowers us, but for most, one that can literally save our lives and empower us to places we never even dreamed of. Think about it like this. There's only one thing, and I do mean this. There is only one thing that you can control in life, and that's the meaning that you give something. That's the beauty of the markets we trade. We've got bulls. They're out there today. We've got bears. They're lurking somewhere. One that sees an event as a selling opportunity, one a buying opportunity. Your beliefs, the meaning of what you give to events, those are the only things that you can control. Now, the way I look at it, I consider that to be pretty cool. Because what we can or cannot do, what we consider possible or impossible, it really is rarely a function of our capabilities. It's more likely a function of our beliefs about who we are, and that matters because if you're trying to make a breakthrough, well, all personal breakthroughs will change with your beliefs. How do you change? Well, the most effective way to get rid of one of those nasty, negative belief systems is to link massive pain. I do mean massive pain with that disempowering belief. Because we've got to believe at our deepest level that that has cost us in our past. It will continue to cost us in our present and ultimately will cost us in our future and only bring us pain. That is what's called the Charles Dickens process. And that means that sometimes you've got to know what you don't want. In fact, you do need to know what you don't want in order to make that change. Now, the cool thing is you get rid of that disempowering belief and you replace it with an empowering belief. What it is that you really want, what it is that you really know that you can do. Because we must know that in any moment, a decision that we can and will make will change the course of our life forever. The very next person you stand behind in line, sitting next to on a plane, the very next phone call you make or take, the very next movie you see, the book you read, the page you turn, maybe it's a newsletter that you subscribe to, something out there is going to open up all of your floodgates. And then all the things you've been waiting for will fall into place. And that, as our leader, Tom O'Brien, says, that is a beautiful thing. Well, let's go check out these markets out here. Bulls are in control. You got the Dow up 81 points, trading out at 16,445. S&P is up 8 points, trading at 1847. Composite up 26 points, trading at 4209. Russell 2000 up 5, trading at 1168. Apple up 13 bucks. Microsoft up 51 cents. Google up 21 cents. It's green in a lot of places. You got the Intercept Pharmaceuticals up 30 right now. Apple up 13. Priceline up 5. Fiery, F-E-Y-E, up $6. That's up 10%. Tesla up $5, 3%. MasterCard up $6, about 0.75% out here. Mattress Firm up $4, 10%. New Skin Enterprises, that's to the downside, up 14% down, $20. They must have released some numbers out here. NUS is the ticker symbol. I don't see what those numbers are, but they are trading to the downside. Intuitive Surgical off $11, about 3%. Kiwi PLC down 16%. Regeneron Pharmaceuticals off 9. Netflix off 7. X1 down 5.55. Fastenal off about 6%, down 260. Our call number 877-927-6648. On the earlier show, we were taking a look at the NASDAQ NQ out here. Boy, it's broken up above its highs. This is let's take a look at the December 30th. Well, the volume on December 31st, this is a 30-minute chart that you're looking at out here. about 8,000 contracts. Of course, that was being taken on with 45,000 contracts. So what we have here looks like the A to B equals CD pattern. And one would have to say it would be a confirmed A to B equals CD pattern. It's a doozy. It'll take you up to 36.71. You're at 36.02 right now. So you got about another 70. Well, that's the minimum, quite frankly. I would have to say if it continues with this pace. Now, look, it's a 120-minute chart we're looking at. It's in the extreme over bought condition, so it's going to have to work its condition off, but it can do that after 4 o'clock at night. Just simply start moving sideways or what have you. It says actually 37.19 could actually be in the cards here for the NASDAQ on the 120-minute chart. Now, what's perhaps just as important in taking a look at, we'll go to the daily charts here shortly, is the Dow. Because the Dow's been a weak link out here. But guess what the Dow did? Remember, this was a beauty because this had a price projection inside of the Dow to a 160-point move. The price projection was 16,176. It actually got down on Monday to 16,179. You got to love that. That's like 0.00 who knows what. So it makes its way down. It completes the consolidation. When you break a consolidation, oftentimes what happens, you come back up and you test that consolidation. That's what was taking place as we were coming into the time frame. Again, it's a 120-minute chart we're looking at 4 o'clock this morning. It finally broke into that consolidation at 8 o'clock. Not exactly with conviction, but it broke in there. You're now inside that consolidation. That says, you know what? Dow easily can go back up and test the resistance area, the top of the consolidation pattern, and that would be on the that would get you up to about a price level of 16,495 right now. Of course, if you take a look at retracements here, I don't know. Let's go from the December 31st high down to the low of Monday. Right now, 16,402 is the 0.618 retracement. You're coming in there with a wide-ranging bar. You're at 16,395. You've already hit 16,40 something. Looks like 405 maybe, 405. So you've hit that area. It says that really inside the Dow, other than the mere fact it's getting up towards the overbought condition, should make its way up to the top of the consolidation pattern again. That would take you up into the 16,463 to 16,495 area. That's what's going on. That's the Dow futures that we are taking a look at the moment. Let's go to our first caller. Let's go to Tom in Plymouth, Massachusetts. Tom, thanks for calling. Thanks for holding. How are you today?
I'm doing fine. How about yourself?
I am doing excellent. Thanks so much for asking. You wanted to take a look at Nugget, N-U-G-T, out here. Tell me what you're doing, how I can help you.
Well, I took a position this morning at 30.40, but I was wondering what your thought of this latest action on it, and I'm looking for maybe for it to jump up there a little bit.
Yeah. So if we take a look at it, so you're in the money, so that's a beautiful thing. You're in a trade. The actual low out here was $30.03. Couple different ways that you can trade this. Now, what the NUGT did, folks, and GDX would be another ETF that you could take a look at in trading. But inside the nugget out here, it's got a little bit of a supply line up at about the on the November 20th session here. So I don't know if 34.55. What was the? Did you have an exit yet picked out on this trade?
No, I was hoping maybe you'd get up to like the 33 area, and I'd be happy with that,
Well, the 33 area, that seems, so the nice thing about 33 is it's below your potential supply line at 34.55. So if you're looking for that kind of a trade, then I would go ahead and I'd put your stop in it to break even so you can't lose today. If you're looking for just a quick pop, because it sounds like that's how you're trading this, put it in so that you can't possibly lose. Worst case is it pulls back, and right now you've got gold. We'll go take a look at gold here. It's trading down 780. I will tell you that all of the stocks almost all of the stocks inside of the GDX, which in essence is what you are trading, are in full bullish trend mode on the daily and the 120-minute chart out there. So, it looks, I also am looking at a buy point myself. Now, I did not get in here this morning inside the GDX. Now, the candle today is not a bullish candle or any type of signal there. Volume so far today, 1.3 million shares. Let's put this on a little bit of a shorter time frame. Let's take a look at the NUGT on a 30-minute time frame. Let's go see if we can find anything. Let's just clear this up here on my screen. So as it was making a low this morning, down at about $30.03, If we take a look at just normal retracement levels from the previous swing point, it was making a 0.618 retracement, so that was at $30.19. So it's just another pretty good indication that if you put a stop in either at your break-even point or maybe right around $30 even out here, and then as far as what you're shooting for, $33. If we take a look at now, if this is off of the bottom here for a bit, no big volume in this thing to the upside here just yet. At $33.15, that's going to be your 0.786 retracement out here. So you might want to take a look at, I don't know how many shares you've got. You might want to take a look at taking a little bit of bread off the table at maybe about 32.22, or just moving your stop up if it gets up to the 32.22 level. And that's the swing point. That's your bearish candle. That's the low of the 11:30 a.m. session on a 30-minute chart from yesterday. Let me just switch over for you here, put it on a 10-minute chart, see what other bars might pop up at us here inside of this that I would take a look at. You're still getting back to about that 11:20 time frame. So I would still say, yeah, that 32.22. So if you get up to 32.22, you might want to take a look at lightening up just a bit out here, unless you see volume behind the move. Are you near a chart where you can pay attention to the volume on a couple of different time frames, Tom?
No, I'm not. That's one of the reasons why I called you. So.
Okay, so then do this. Look, make it an easy trading decision. Put a stop in so that you're at break even. You can't lose on the trade. Let's do that. Take half of your shares at $32.22, and the other spot you said $33. I don't have any reason to tell you not to take it at $33. I would say the 0.786 would be a mark that you could take a look at. And that number was $33.15. So $33 seems like a reasonable number to me. And let it trade. The only decision you're going to have to make is at the end of the day if none of those points have been hit, and then you're just going to have to make a decision whether you want to just be a day trade and take whatever profits you've got at that stage.
Sounds great, Steve. Thank you very much.
Hey, you're welcome. Thanks so much for calling. Thanks for listening. Have a great Wednesday out there. That was Tom in Plymouth, Mass. He was taking a look at NUGT, which is the 300% ETF for the GDX, the Gold Vector Miners Trust out there. Let's go back to the markets out here. Let's go see what we've got going in. Let's take a look at the indexes. Let's start off with the VIX index. Let's see what we've got going on inside of the VIX. So the VIX had moved a little bit lower this morning, trading down at 12.19 out here. It's below the 50-day exponential moving average. That's positive for the bulls. If we take a look at the S&P 500, S&P 500 taking on the December 31st swing point, the high of which is 1849.44. You're at 1847.87 right now. It has not hit the high. 1848.16 is so far the intra-session high inside of the S&P 500. Expect that to be tackled. If we take a look at the New York Stock Exchange, we'll do that when we get back here. It's trading inside that December 31st swing point. And yes, that old island reversal that we had talked about, that was negated on the trading session of January 10th when the boat docked inside of the candle session from December 31st. 877-927-6648. We'll be right back, folks.
With over 3 decades of trading experience, Andy Hecht brings a tremendous amount of knowledge and expertise to each weekly issue of his newsletter, the Technomental Commodity Report. The Technomental Commodity Report gives you Andy's unique technomental analysis of the commodities market, a combination of technicals and fundamental analysis which he has developed and perfected over his many years of trading. The Technomental Commodity Report is only $49 a month, and right now you can get a full month-long trial subscription while paying absolutely nothing. See for yourself the kind of weekly report Andy delivers to his subscribers every Thursday morning. You'll receive specific stock, ETF, and option trades based on Andy's analysis, so no futures account is required. For all the details and to start your month-long free trial to the Technomental Commodity Report, visit TFNN.com today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow, it's up 95 points right now. S&P is up 8.5, trading at 1847 out here. And if you're watching us on Tiger TV, you're taking a look at one of my tools. It's the Rhodes Momentum Indicator Market Analyzer that we're taking a look at. We had a call from Tom in Plymouth, Mass. He was trading the NUGT, and I had mentioned that most of the stocks were in bullish mode on the daily chart out here. I'm going to just remove a couple of the equities in here where I'm not getting any kind of data feed. There may have been a couple of stocks here that have been removed since I put together this list. I'll have to go back and take a look at that, but just a removal of just a couple of stocks out here, just not to confuse us. So here is, and what this tool does, folks, is it helps me to, in just a moment's time or however long it takes to download the data, but basically in a moment's time be able to identify what the trend of the stocks are on different time frames. And so what I'm using here right now as we take a look at it, we're taking a look at the time frames. There we go. I'm just going to clean it up just a tad. We're taking a look at the weekly, at the daily, in at the 120-minute time frame out here. I can use whatever time frames it is that I want. And what I'm really going to focus on here, obviously, look, on a 120-minute chart, you're going to see a trend change before you'll see something on a daily. But no matter what time frame it is that you trade, and this is somebody like Tom that maybe is going to be in a trade for a short period of time, I would probably be looking more at the 30, 60, and 120-minute charts, and I might be looking at the daily chart. If you're a swing trader, you want to know what's going on inside of the daily chart, and certainly what's going on inside of the weekly, or at least these three time frames here, weekly, daily, and 120. And what you can see here on the daily chart is if we take a look at those stocks that truly are in a bullish trend. And a bullish trend, as you take a look at this on my screen, it's either going to say new uptrend, which is green. Those are areas, those are stocks you might actually want to take a look at buying out there. You've got to do some additional work, but there's stocks like AEM, Eagle Mines gave a buy signal on January 11th, but we're at the 15th right now. Ashanti, Anglo Gold, Ashanti gave a buy signal on the 11th. You've got Gold Fields, GFI. You've got Rand Gold Resources, Pan American Silver. You've got stocks that are actually in what I call the strong uptrend mode out there. Strong uptrend, really nice because it shows that there is some really nice buying intensity. And you can see you got a ton of those stocks out here. And then you've got some stocks here that are taking a little bit of a breather right now. These stocks, where they say retracement, they actually used to be in the strong uptrend level. And now they've begun pulling back a bit. But that's what's going on the daily side. Actually, all but two stocks have given you very strong bullish signals. So if you were trading the GDX or the NUGT, you'd want to understand what the trend is going on inside. In my opinion, you'd want to know what the trend is going on inside of the daily charts. Also helps you on pullbacks like we saw that took place yesterday. You know, and the pullback may not be over. It wasn't really a bullish candle that we saw. It was just simply a green candle, which means it was trading up above the lows out there. So you want to make sure you're taking a look at patterns inside the marketplace. But on the daily chart out here, for those of you non-believers in what's going on inside of the gold market here, I can tell you that the Rhodes Momentum Indicator Strategy system out here has picking up some very bullish signs. This is on the daily. Now on the weekly chart out here, let's take a look at the weekly chart here, because you want to understand the trends in all cases. If we take a look at the weekly chart, there's only five stocks. 1, 2, 3, 4, 5. Remember, I deleted about 4 or 5 of them, so they may have been replaced by some other symbols, or there may be some symbols that are inside the GDX that are coming from Canada, possibly, that I'm not getting a data feed on. I'd have to go really take a look at that. But you got like Yamana Gold on the weekly, you know, it's still in what I consider on the weekly basis in a downtrend. Goldfields in the weekly basis in a downtrend. Kinross Gold. So, but these will change, right? They're going to change first on the daily, then they're going to follow through on the weekly. But what we can see here is even the weekly chart is giving us some pretty decent bullish signals out here. And the daily, now if you take a look at the 120-minute chart, you know, we're seeing some gyrations. And we could expect that based on what we saw yesterday. And inside of the week, the 120-minute chart, you know, you see maybe about 6 stocks here, you know, that were pulling back a little bit more than perhaps they should have, or that you'd like to see inside of the nugget, inside of the GDX out here. But here is the trend inside. Taking a look at a weekly, a daily, 120-minute chart, folks. If you hadn't had a chance to check out Mastering Probability, go to the homepage at TFNN.com. Do yourself a favor. I include this style chart out here for every index. The commodities, the currencies, so whatever it is you trade, you're going to be able to understand what the trend is. And with regard to the trades that you're in, I also go do scans of the entire S&P 500, NDX 100, the Dow 30, so you know what's going on inside of the stocks there. So that's the GDX. That's most of the stocks within inside that sector. Right now, the Dow is up 99 points. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow up 100 points right now, trading out at 16,474. Let's go check in on the New York Stock Exchange now. We've got the monthly chart up on our screen out here. Of course, we're only halfway through the month. You've got the New York Stock Exchange trading out at 10,381.19. Now, the swing point that it is dealing with is the all-time high, the October 2007 swing point. That's at 10,387.17. If you can close above that swing point here for the month of January, that will have been a test of that swing point. You see, inside in December, the actual close on the New York Stock Exchange was just slightly above that. It was a 10,400.33. So it closed above it. This month, we've clearly traded below this. And if at the end of January you're trading above the 10,387, you'll have had a test of a significant swing point, also of a primary trading range boundary line. 10,412 is the actual PTR number here for the New York Stock Exchange, but that's going to be close enough for me that it had tested it, got over it or close to it, because we're using that more as a guideline versus an exact number out here. In fact, I'd say 10,400 versus 412 would be the number that you can use. Now, if you're watching this on Tiger TV, and if you take a look at the New York Stock Exchange, we take a look at consolidating patterns, which is what we're in right now inside many of the indexes, not necessarily the composite, but we'll go take a look at it. But here we'll take a look at the New York Stock Exchange, and you can see that this was actually in a sideways consolidation pattern from 1997 all the way until about 2004. I'll draw a little bit of a square around that area. Here is the consolidating pattern out here, that little larger square. Let me just go ahead and get rid of the yellow, so we won't make that interior yellow. We'll just make it a big old dark line out here. There we go. In fact, let's make it a big red line. Make that nice, and there we go. So there's your consolidation pattern, this big red box. Now, I've measured that consolidation by this little smaller yellow box out here. And you can see price broke out of it. The consolidation I'm referring to back in December of 2004, comes back in the month of January, breaks back out in February 2005, comes back and tested in March of 2005, back inside in April 2005. Now, just in a very small, very tight range out here, finally breaks out above it again in July of 2005, and then off to the races. In July 2005, goes ahead and makes its measured move, the 100% move out here inside of the New York Stock Exchange. Now, the measured move would have taken you to about the 9,800 level. Obviously, it went up to a higher high, got up to that 10,300 range that we're talking about. Now, as it was making that high out there, it did it with price relative strength divergence. That's what you would expect to see at a significant top. Now what we're taking a look at here is the New York Stock Exchange, and there is no price relative strength divergence when you take a look at the monthly chart inside of the NYSE. So pretty significant levels that we are trading at right now. Why? Because what the NYSE actually did back in 2007 came all the way back down to the bottom of the original consolidation out there. That means now that our consolidation, let me go ahead and put that box up here right now. Now the consolidation is 6,500 points. The consolidation looks like this. Here's your consolidating pattern. Let's go ahead and get rid of the yellow fill here. Let's make that transparent. And let's make it a big old line out here. And this time we're going to go ahead and we're going to leave it as a black line. There is your consolidating pattern inside the NYSE. And yes, if it does break out of here, it is suggesting a 6,500-point move to the upside. The NYSE to about the 17,000 level is where that would take us to. But that's what's going on inside the NYSE, the wider swath, the wider breadth of the marketplace out here. And that's on a monthly time frame. On the daily time frame, also extremely bullish as we speak right now. Remember, boy, if you didn't catch the early show, we were taking a look at the Dow back in 1929. And I don't remember what time frame it was. Might have been July of 1929 when it had formed an island reversal pattern. And when that island reversal pattern was taken out, this was an island bottom pattern, by the way, that it had formed out there. When it had taken it out, and it was not the crash of 29 that took it out, it was before that. So you got plenty of signals. In this case here, plenty of bearish signals. When the most bullish pattern gets taken out to the downside, that's got to tell you something. It does tell you something. Well, guess what? We had the most bullish pattern, or the most bearish pattern here inside the New York Stock Exchange, and that was taken out a few trading sessions ago. That was the island reversal that it created between the trading sessions of December 30th, December 31st, and January 2nd out here. You see this little gap. There's a gap in between the session of the 30th and the 31st, as well as a gap to the downside into the January 2nd time frame. Well, guess what? The boat went and docked inside there, and it closed that gap, and it did it on January 10th out here. Now, if we see the high get taken out, so this is how you correlate it to what's going on inside the monthly chart. That high, 10,406.77, and again, it stays out in the entire month of January. Look, not that there can't be some jostling around, but what it's giving us a signal is we just took out the most bearish pattern. You closed above it. You closed above a consolidation level that's been going on since, what did I say? I don't remember, 1997, 7, I can't remember. I have to go back and take a look at the stock chart out there. But consolidating for what seems like forever out here. And now it hasn't happened yet. Has not. We've closed the gap. We've closed the island. But in order to get really bullish, you got to close above that level, and that's 10,406. And that has not happened yet. But we know at least what it is that we are paying attention to and what it is that we are looking for. And so that is inside the New York Stock Exchange. If we go take a look at the Dow, I did some additional work in the Dow over the weekend out here. And the Dow actually has completed its consolidation move. You see, I show the Dow here when we take a look at its consolidation coming back into the 1997 time frame as well. And the Dow here was consolidating sideways. It broke out of that consolidation back in October of 2006. It makes a move where it gets into the 2007 time frame. It does what? It creates that price relative strength divergent pattern, the same pattern that it created back in 2000 before it moved down to the bottom of the consolidation. Guess what? That breakout turned out to be a false breakout back in 2007. The Dow gets back into the consolidation. It does it back in June of 2008, goes all the way back down to the bottom into the 2009 time frame. Here's the measured move. Those are the yellow areas that you're looking at on my screen out here. The price projection was 16,300. We're trading at 16,460 as we speak here right now. So it's a measured move when you break these consolidations. It means you can go higher. But actually, the Dow here, so here's what's interesting about the New York Stock Exchange. It's trading up against natural resistance, a swing point from 2007. So far, it's failed. It's failed. It gave us that ultimate bearish reversal signal, the island reversal, which now no longer is present, so we just kind of discard that one altogether. We still pay attention to the swing point out here. And the Dow has actually made its measured move. Something to think about. However, we do not have the price relative strength divergent pattern. If you go into the Dow, you go back as far as you can, and you will find that all significant tops and bottoms, that what you do find is that price relative strength divergent out there. Now inside the composite, and this is enough to go ahead and power us higher. Inside the composite, as we take a look at its consolidation pattern, its consolidation pattern is going to finish up at about the 4,400 level. You're at 4,200. That's only another 200 points, folks. The composite can do that in a heartbeat. I think it was up about 50 points yesterday, so it can do that in a heartbeat. Maybe that's. Now, inside of the composite, I actually show the April 2014 time frame as a time frame where it might make a significant swing point. In this case here, looks like it might be a significant swing point high. The composite also would be at that stage getting back and testing the March 31st, 2000 swing point low. That number is at 43.55, so you're at 42.03. No bearish reversal signals on a monthly chart here. You're at a new all-time high. That stretches the peak counter, the Basil-Chapman peak counter. You're still in peak D. It means it can, it has not ended because of the high that we've seen take place here over the last couple of days. If we take a look at the daily chart for the composite, it's up and above the rising price channel, but the bottom of the price channel here is more important. It's already in an uptrend, so getting above the uptrend, that's not a big deal. But you can see here right now, you're up and over any type of bearish pattern on a daily chart inside the composite. The last bearish candle to show up, really a key reversal session. You had two of them. One was on January 9th. The other key reversal session out here was on January 13th. You're up and over all of those, and you gapped up here this morning. So it's clear sailing, and we know where the composite wants to travel to. If we take a look at the NDX 100 right now, it's traveling up into, and it has completed its, by the way, the NDX 100 has completed its consolidation move. Its consolidation move had completed back in November, I believe it was. Yeah, November. That price projection, that 100% price projection, was right around the 3,400 level. That's the yellow box you see on my screen. If I take that yellow box and I move it down here, here's the consolidation. So you can see when it broke out of the consolidation as I move it higher. Really broke out with a conviction in October of 2011. So it's completed its measured move out here, and it's up against its next primary trading range boundary area, which is at the 3,600 level. You're at 3601.64. Excuse me. As we speak right now, it too has not or has extended its leg D on the monthly basis inside of the NDX 100. Let's take a look at the Russell 2000. Russell 2000. Well, the Russell 2000 has more to go for it to complete its measured move of its consolidation breakout. It needs to get up into about the 14,000 level, 1380, somewhere right around there. You're at 1167 right now. There are no reversal signals on a monthly basis inside of the Russell 2000. Looks like it is, let's see, is it taking out its high from last month? 1167.96, and so far we've seen 1167, 1169.74. Yeah, so it's already taken out its highs from. You're trading below that, but it has taken out its highs. Let's look at a daily chart here. Let's go take a look at the daily indexes for the Russell, because the Russell has a 3 drive to a top pattern. So if it takes that out, just like taking out the island reversal, 3 drive patterns, they are very significantly bearish out here. So all we've seen now today is a test of that area. That's the swing point. That's the shooting star candle from December 26th out there. The high is 1167.96. You're at 1167.39. You've tested that area. Of course, you've gapped up today above there. So that is pretty powerful inside of the Russell 2000. If it takes that area, maybe you don't want to hear it. I don't know what to tell you. The patterns are what the patterns are in the marketplace, and that's what you got to trade. Speaking of the patterns are what the patterns are in breakouts, let's go take a look at what's going on over in Europe out here. Let's go take a look at the FTSE. Now, the FTSE here is, let me go see what it's doing here. It's trading up today. It's trading up 45 points, about 0.6%. Shoot, the DAX is up nearly 2% here as we speak. We're looking at the weekly chart here for the FTSE, so we know this does not end until Friday. But what the FTSE has done now, it is up and above resistance. An old resistance on the weekly basis, if it closes above the level here, this is the 2007 high, October 19, 2007. Its high there was 67.51.70. You're trading at 68.11.70. So it is now threatening to break out. A real breakout on this because of the swing point that was established, and this was here back in, May of 2013. That high is 68.75.62. So there's another little bit of a hurdle, but it's cleared the largest hurdle so far. It's only Wednesday. Well, in this case here, the FTSE comes to a close in, about 45 minutes, I believe, around 11:30 our time. And you got to come back and take a look at this chart on Friday. But across the globe here, you've got the FTSE that is trying to break out above its 2007 highs. And I'd have to say that this chart here maybe more emulates the New York Stock Exchange. That's the only one still not closing, that has not closed above the October 2007 highs out there. But if it does, that becomes potentially a breakout out there. And no price relative strength divergence. Let's take a look at the FTSE out here. Let's put that tool, see if there's any price. Now, there's no price relative strength divergence at the moment inside of the FTSE either. Let's go take a look at the DAX. Let's go see what the DAX is doing out here. DAX up 2% this morning, so it's at highs. It looks like it's now on its way to its 1.618 expansion of swing points, and its larger 1 to maybe 1.2728 to be equal CD. So it looks like the DAX here wants to head up to about the 10,076 level. Let's give you the range on it. Let's take a look at a 1.618 expansion of swing points inside the DAX. 1.618 level takes you to 10,939. So somewhere between 10,073 and 10,939 looks like that is probably its next move out here, and that is inside the DAX in Germany. It's up 2% today. It's a monthly chart that we're taking a look at. Let's go take a look at the daily chart. Give me a moment to go ahead and pull that out here. What's the daily chart doing? This is the daily chart off of it's a smaller rising price channel out here. I don't have volumes on. Let me refresh my screen for you, so I can't tell you what the volume pattern is. But you got a nice wide-ranging bar today and a gap up. That's a big session. So you got the DAX. Now, yesterday we were taking a look at the Shanghai. The Shanghai did not follow through for us. Beautiful pattern that we're looking at. I'm sorry, was it the Shanghai? Yeah, it is the Shanghai that we are looking at, or we were looking at. When we get back from this break, we'll go take a look at the Shanghai. Didn't give us any kind of confirming signal. Did not reverse either. 877-927-6648. We'll be right back, folks.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you, other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow up triple digits, up 100 points. S&P is up 8. Let's take a look at some of these stocks here that are moving and grooving. Let's take a look at a couple that are really struggling today. New Skin, NUS is the ticker symbol. Up until today was part of the IBD 50. Now it's part of the, I don't know, we got to come up with a good name. Once you fall out of the IBD 50, maybe somebody there can help me inside of the Tiger's den. This thing here, I don't see what the news is behind it, but clearly there is some news. And institutional selling. First time we've seen institutional selling in this stock here in like forever. Last time, I guess you could say, was back in August of 2012. Well, this is a classic volume off the top here, so if you're not out of new skin, you know what, it's coming back into its last breakout session, but it's doing it with more volume. The last breakout session was October 22nd, 2013, the low of which is 102.71. You're trading at 111 right now, 5.7 million shares, but you gap down today with so far 3.8 million shares, and we've only been trading for an hour and 25 minutes. So this is not good. If you are in a new skin out here, you've gotten your first sign of institutional selling. If you've ridden this thing up and you've taken some nice profits, then might be a good time to go ahead and unload, because you got the institutions, they're unloading, and guess what? They're not done unloading. And some other, and if you don't sell now, certainly sell. Take a look at selling on some kind of a bounce, because you will see this stock get unloaded upon again, and that is on new skin. Let's see, what else do we have to the downside? Kiwi. This is also, I believe, a IBD 50 stock, QIWE. Used to be, I should say, an IBD 50 stock out here. Now, this one looks a little bit better than new skin does. Not necessarily from the mere fact that you got institutional selling, but it has not reached its last sign of strength out here. Well, I guess it all is in perspective, right? Question would be, where's this headed to? And it's most likely headed to that sign of strength, which was October 1st. Wide price spread, accelerated volume, 4.5 million shares, anywhere between 32.08 to 37.65. You're trading at 45.46 right now. That at 4.5 million shares in the first hour and a half. This thing has unloaded 1.8 million shares out here. So it, too, with some significant volume off of the top. Maybe this actually is a little bit worse because it's never had a chance to really build any kind of a base out here. It was an IPO back in May of 2013. When this thing had its IPO. So that's on two stocks truly getting hammered today, percentage-wise and dollar-wise. You've got X1, XONE is the ticker symbol. Congratulations there. David White seems to have pegged this one again for a second time. That is a beautiful thing here. This thing gapping down this morning. It's got some volume in it so far, 1.5 million shares. To the downside, this thing is, certainly headed to its swing point low. Has it touched it? No. Should have headed to the 53-ish area, 51 to 53. December 17th is a swing point, 315,000 shares, but today it's already done on this gap down, 1.7 million shares. Looks like this thing, but this is also an IPO that takes you back into February of 2013. So X1 struggling out here. Probably good for the long haul, but struggling this morning. Let's see, what do we have here? Let's go take a look at some positive news. Let's take a look at the Show Up. Let's go take a look at Mattress Firm. Of course, I don't know if this is going to be good or not. MFRM, because I think this at one time had some pretty big selling. MFRM is the ticker symbol. Well, if it did have some selling in it, it's to the upside today. Volume so far, 468,000 shares, headed up to its swing point high from July of 2013 in the 46.85. Folks, thanks so much for joining me. Been a pleasure to be with you today. I look forward to seeing you tomorrow. Stay tuned. Basil Chapman is up next. Larry Pesavento, David White, Daryl Martin. He's going to slip in there in the Tom O'Brien Show from 4 to 6. Have a great Wednesday, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.